Hey guys, this is Justin for BreakIntoCRE.com, and in today's video what we're going to do is break down how to do a real estate market analysis so you can decide where you want to invest for your next deal. So if you're trying to decide what the best markets are to invest in and you want to know how you can actually figure that out, make sure to stick around for this video. Now, if you're new here, on this channel we talk about real estate investment analysis and real estate financial modeling. So if you're looking to do your first commercial real estate investment deal or break into the commercial real estate industry altogether, make sure to subscribe to this channel and hit the notification bell to be notified every time we release a new video. So if you're looking for a real estate market to invest in, how do you actually run an analysis to figure out where you can maximize your chances of success for your next real estate deal? Now, in my experience, the single biggest thing that you can analyze to figure out whether or not a market is growing is to take a look at the net migration patterns of that city and or state. So net migration just measures the amount of people moving into an area versus the amount of people moving out of an area. So positive net migration means that more people moved in than moved out, and negative net migration means more people moved out than moved in. So what you want to see is a positive net migration pattern where cities and states are seeing more people come in overall than are leaving, which creates an additional demand for housing, retail properties, and office space, and even industrial warehouse space as well. So as more people move into an area, the demand for housing goes up. And even if many of these people decide to purchase homes, that puts upward pressure on home prices, which also puts upward pressure on multifamily rents as well. This also creates upward pressure on consumer spending, since there are more people in the area able to buy goods and services. And as far as office properties are concerned, many states actually have net migration patterns that are in large part due to job growth in the area. And what this means is more demand for office space, which creates upward pressure on office rents as well. Even for industrial properties, with more people living in certain areas, there will be more of a demand to create industrial hubs near that growing population to get them products that they've ordered more quickly. So if net migration patterns really determine the direction that a market is going, what actually determines net migration in a market? Well, there are really three main things that are going to affect net migration patterns in an area, so that's what we're going to cover next. So number one is job growth. Now, even with the growth of remote work, the vast majority of people still go to an office space or a place of work every day in order to collect a paycheck. And oftentimes, these people will actually move to certain areas because of a certain job. And with the more job growth you have, that increases the demand for housing, retail, and obviously office space as well. Now, number two is the cost of living. Now, this is a huge one, especially for people living in high cost of living cities and states. And within this, I'm going to lump in home prices, rents, and income taxes as well. So if you take a look at the US cities with the largest positive net migration in 2018, you'll see lower cost of living states like Florida, Arizona, Texas, and North Carolina are going to top the list, while higher cost of living states like New York, California, Illinois, and New Jersey are all negative net migration states. Now, this doesn't only apply to individuals, but also applies to companies. So if bigger companies can move their office space to lower cost of living areas, that allows them to pay their employees a lower salary, which ultimately decreases their overhead and allows them to be more profitable companies. Now, finally, number three is weather. Now, with more options than ever for remote work or finding jobs out of state, more than ever before with technology, people are deciding to move where they want to live and find work around the desire to live in a certain city. So again, if you look at the top of the charts for net migration patterns, you see Florida, Arizona, Texas, and North Carolina, which are all warmer weather states. And again, if you take a look at the bottom of the list with the largest negative net migration patterns, you see cities like New York, Illinois, New Jersey, Massachusetts, Connecticut, and Michigan all had negative net migration patterns in 2018. Now you'll notice that California is exempt from this list, so even the beautiful weather can't keep everyone here. Now, if you put all of those things together, you really maximize your chances for a long-term growth market and overall profitability if you decide to invest in a deal in that specific city or state. Now, once you've chosen a market, the next step in this is going to be the deal analysis portion. And with that, you're going to need to know real estate financial modeling and deal analysis. So if you're looking to improve your real estate financial modeling skill set, definitely check out my free real estate financial modeling crash course, and you can grab that for free in the link in the description below. And if you want to go deeper into market analysis, real estate financial modeling, and building models from scratch, and how to analyze multifamily, retail, office, and even single family home deals, check out Break Into CRE Academy for access to all of my courses, all of my models, and some additional support from me, and I'll also link that in the description below. So thanks so much for watching. If you like this video and want to see more videos like this, make sure to hit that like button, subscribe to the channel, and share this with anyone else who might find this helpful. Thanks so much for watching, and I'll see you in the next video.